Back in May, I made the embarrassing mistake of calculating AMD to be a 100 to 120-ish dollar stock like a complete and utter noob moron. Ugh. After loading the boat, I was thankful to see that I had underestimated the market's enthusiasm for AMD. As the stock was sitting around 73 bucks at the time, you can imagine that I did indeed load the boat and have enjoyed more than 100% gains on my investment. Now I understand that I'm going to have to turn in my YouTube investor channel card for not only being wrong on my calculations, but also for starting to sell some AMD last week for profits, like a paper-handed weakling. Now Intel, on the other hand, oh boy, isn't this 6-month chart a thing of glory? I mean, why wouldn't you all in on a stock with a chart this beautiful? In a series of videos I did on AMD and Intel starting a few months back, there were a couple of big tidbits of information that made it seem like the overall market sentiment that Intel is indeed dead for sure may actually be fake news. And the first bit of news was that rumors of Intel's Alder Lake processor beating the competition at the benchmarks. If you're new to computers, that basically means that for a long time, competition like AMD has been able to bench press a lot more weight than Intel has. But Intel just came back into the gym and showed them up in front of everybody, despite thinking that would be impossible. A couple of articles here show how Intel's new processors are performing in the real world, and it's surprising enthusiasts. The article on the right from tomshardware.com says that the $289 Core i5 12600K puts up a really good fight versus the much more expensive $390 Ryzen 7 5800X, which many people haven't been expecting because marketing magic has made it seem like Intel's chips are lagging behind in the nanometer production process race. Indeed, as far as performance goes, Intel has been lagging behind for years, which is the reason they've been losing market share to the likes of AMD and Nvidia, especially when we look at the data center segment. This slide is from AMD's recent earnings presentation showing us that their data center graphics revenue has more than doubled year over year and quarter over quarter, and a lot of that is thanks to Intel's falling behind in the last few years. The second bit of surprising news was the announcement that Intel would be partnering with their kind of competitor, Taiwan Semiconductor, probably their largest competitor when it comes to actual semiconductor production, aside from maybe Samsung. Check out the blurb on the bottom here announcing that Apple and Intel are testing their chip designs with TSMC's 3nm production tech, with output of such chips expected to start in the second half of next year. If you're unfamiliar with the industry, AMD is 100% dependent on Taiwan Semiconductor for the production. AMD only designs the chips and then has to outsource the rest of the whole process to Taiwan Semiconductor. Intel, on the other hand, is kind of like AMD combined with Taiwan Semiconductor because it can do anything they can. It's just been getting really mediocre at all of those steps in the process until recently. But with these two bits of news on our mind, I'm wondering how that could impact both of these stocks going forward. With AMD and the overall market busting all-time highs in the last couple of weeks, our natural reaction should be to prepare for things to unwind a bit in the opposite direction, which is why I've been taking profits on a portion of my AMD holdings, looking to buy back in at a lower price in the future. I've sold a few blocks from my holdings, but I still hold much more than half. So when we're analyzing companies, and especially when we're comparing them head to head, we're going to need to take a look at how their financials compare. And with the recent massive run-up for AMD, the multiples are getting into, dude, AMD, can you stop being such a silly monkey, please? We're talking about financial investments here. So let's take a look at how out of whack the valuations have gotten. First, let's check out total revenues and gross margins. We have AMD on the top and Intel on the bottom, and we're looking at the last 3 completed years, and the LTM on the right column stands for last 12 months, since this year isn't completed yet. Immediately, you'll note just how massive the numbers differ. In the LTM, Intel's revenues are 5 times greater than AMD's. While we're seeing year-over-year growth in AMD's favor by far, I think these figures will start to turn around once the news we talked about earlier starts to spread, and new CEO Gelsinger's strategies start to kick in. After revenues, check out the gross margin percentages. AMD is showing solid growth versus Intel's mediocre growth, but the actual percentages still favor Intel big time by about 10%. So to review, Intel's doing 5 times the business and pulling stronger gross margins than AMD. So let's see how the market values these companies to get a better idea of what value we're looking at. While AMD's market cap sits at $178 billion, With Intel doing roughly 5 times the revenues, you would expect Intel to be sitting at something like, I don't know, 800 billion or a trillion? Alas, things aren't that simple, young grasshopper, and Intel sits at a market cap of only 204 billion. The market cap is the number of shares available times the current stock price, giving us an idea of how much the world basically values each stock. So now knowing what we know about the revenues and gross margins, doesn't this seem a little bit weird? We see examples of this all over the market with, for example, the other day, EV newcomer Rivian posting a larger market cap than almost all automakers at 127 billion, while Ford, who owns a portion of Rivian, is only valued at 78 billion. For the overvalued newcomer stocks with a lot of hype, we often see them cycling up into the stratosphere, while more boring and traditional namesakes like Ford or Intel languish in weak share growth. Next, let's cruise further down the income statement to get a better idea of how Intel and AMD compare. Let's look at the research and development expenses, where we see that AMD has spent $2.6 billion in the last 12 months versus Intel's almost $14.8 billion. Again, Intel's spending 5.6 times what Intel is on developing new technology. Granted, since they're operating in a number of fields AMD isn't, that R&D budget is spread out a bit more thin if we just look at designing processors for an apples to apples comparison, but Intel's still got a massive edge here. And now that Intel's hopefully being more optimized under new leadership, can AMD continue with its supposed edge for much longer? And once again, a look at the operating income and operating margins shows again that in the last 12 months, despite AMD's rapid growth, Intel seems to be a superior cash producing machine too. And again, the market caps for reference. You starting to see some dissonance yet? Shimmy on down to the EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization, and is a helpful metric in understanding the profitability of a company, and we see a similar story. While AMD's blazing growth shows impressive year-over-year figures, the total numbers themselves kind of indicate to us that perhaps AMD is wildly overvalued, or Intel is wildly undervalued, or probably most likely some combination of both. In 2020, AMD's EBITDA was less than 5% of Intel's EBITDA, and in the last 12 months, it's closer to about 10%. AMD's growing big time, but they're still like super tiny in comparison to Intel, dude. And the balance sheets reinforce that. Looking at cash and equivalents, Intel holds almost 10 times AMD's at more than 34 billion. Now we know AMD doesn't do any manufacturing, and they're dependent on Taiwan Semiconductor for that, so it should be obvious that Intel's assets, particularly plants and equipment, should be monstrous in comparison, but just for clarity, check it out. I cut out some of the categories here, including long-term investment and goodwill for legibility, but once again, AMD's current assets sit at about 13% of Intel's, and the total assets only work out to be about 6% of Intel's. So it's clear we're looking at two entirely different beasts, but all of this goes to show us that the markets are wildly inefficient, and when we see opportunities like this, we can make money, especially like we talked about earlier, now that we know that Intel isn't actually dead because their new products are pretty freaking dope. Next, I wanted to compare the EV EBITDA multiples. I think as of 2020, the S&P's average EV EBITDA was something like 14-ish. And if we see the ratio dipping below the 10s, we can often spot opportunities. And the lower it goes, the better, basically. And so this ratio is important because it allows us to compare similar companies' actual earnings and enterprise values, rather than using the market cap, which is so dependent on the whims of the market. And it also takes into account overall debt as well. AMD's trailing last 12-month EV EBITDA multiple works out to almost 52. Looking at the previous 12 months is helpful, but perhaps adding in the next 12-month EV EBITDA multiple will help even out the rapid growth AMD's seen lately. But we're still seeing a 35x multiple. Now, I'm not saying that this is a deal breaker for those interested in AMD at this point, as we've seen multiples much higher with companies like Nvidia for a long time now as it continues its climb. But as far as finding a good deal for investors goes, let's add Intel to the equation and see how they stack up. Intel's backwards-looking LTM EV EBITDA works out to only 6x, and the next 12 months works out to just about 7x. So these numbers take into account what we saw earlier and show us that the free cash flows should be far superior with Intel. And now that we know Intel's products aren't really dead, this is a really good thing for Intel investors. And the crazy thing is that while AMD is considered by many to be the king of processors still at this moment, even like 4 or 5 years ago, the major market sentiment was that they sucked. Intel was king and AMD was poopy diapers. And while 5 years kind of is a long time, and AMD has made tremendous leaps and bounds in that time, thankfully, despite Intel's lack of growth and solid leadership until recently, they're still way freaking bigger and have way more power to invest for growth and development into the future. And so seeing those tides turn once like we have in the past, considering that it could happen again in the future, really isn't that crazy of a prospect, right? We looked earlier at how much more cash and available resources Intel has for continued growth in R&D, and in the past, we've also looked at the Chips for America Act and FABS Act, where the US is working to support companies like Intel after realizing that its lost production capability and tech edge to other countries is going to become a problem in the future. And Intel is undoubtedly going to become one of the major beneficiaries of this support because of its onshore fabrication capabilities. And again, we see more news about Intel throwing another $20 billion into its Arizona plant, with CEO Pat Gelsinger giving us the thumbs up here. What a stud. I wish that guy could become my grandpa or something, because he just seems to be like such a positive guy to be around. And we've seen Intel looking to pump about $95 billion into Europe to create more plants, along with major investments in Israel and other parts of the US as well. And yes, I know building a fab isn't just a matter of throwing some machines into a new factory and hiring some people. There's as much art as there is skill and technology involved, and Intel is undoubtedly making strides on that front too under its new leadership, who seem to be willing to pay and keep talent unlike previous cost-cutting CEOs. After all, before Gelsinger was CEO, he was an engineer and knows the production and development parts of the business more than maybe any other of their recent CEOs do. And so, hold on a sec. Before you comment, they can never catch Taiwan Semiconductor because they're too far behind. Just remember that every market, particularly markets that are production restricted globally and absolutely crucial for every world power to have a part in, cannot be dominated or controlled by one single company ever. Oh, and the fact that Taiwan Semiconductor is basically already maxed out and sold out for next year too, that argument is kind of like making the argument that Tesla's vehicles are superior to all other makers, therefore every other company is invalid or should be worthless. First of all, Tesla's production is already maxed out, and ordering a top-tier Model X will have you waiting something like 15 months, I think, until delivery. And secondly, the vast majority of drivers can't even afford a Tesla straight up. So that's why Toyota sells jillions of Corollas every year and makes jillions of yen doing so. So with all that being said, I feel like I wouldn't be surprised if we start to see AMD shifting into reverse sometime soon, simply because I feel like it's overshot its fair value. Intel, on the other hand, seems to be a few bucks short of its fair value, but in the long term, I wouldn't be surprised if we start to see both of them moving closer to parity than they are now. For those that are wondering, I feel more comfortable with AMD closer to the 120-ish mark and Intel closer to the $60 to $65 mark. I did have a counterpoint to this whole argument, however, so check out this slide where Morgan Stanley research suggests that top-line growth tends to be the long-run driver of stock performance. It says sales growth is the key driver of long-term stock performance, and it looked at stocks from 1990 to 2009. So rather than free cash flow, which appears to be the smallest contributor to the equation in their findings, down there in the blue, sales and profit growth tend to impact share price growth more than anything else. And boy, are we seeing AMD making this a reality. So while Intel, who is already super massive, will have a hard time putting out year-over-year figures as drastic until its new fabs are ready to go, the question I pose for you guys is, will AMD be able to keep up this growth long-term too? If you're wanting to learn more about how Intel stacks up with Taiwan Semiconductor and AMD, click on this video up here. Love you guys and stay generous.